Hello, everybody. Welcome to Tuesday. The S&P 500 was down almost 0.5% today. Did not have any changes to our signals. Still green on the stock signals and yellow and green on the bond signals. Really today, in my opinion, and the next couple of weeks have a couple of themes that I think are important to understand. First of all, the market has stretched to the upside quite a bit. We've had a pretty big run. I like to use that rubber band analogy. You pull a rubber band, you can keep going, but it gets harder and harder. The farther you get, the bigger the snapback. We've had a really big run here for a couple of weeks, so we're bound to have some type of pullback, and we're certainly seeing that a little bit on Friday, a little bit today. And then, of course, as we head into the end of the quarter, these very large funds, these 401k funds, the target date funds, and what have you, they'll have targets for how much they want to have in stock and bond. And of course, they get out of balance. And so they buy, and rebalance at the end of every quarter. So whatever's done the best is going to do poorly for that 2 weeks. And whatever's done, the worst, at least during that quarter, has a chance to do well. And so today was a good example. The stock market's down. Stock market did better this quarter. Bond market was up. Bond market did worse. And if you look within the stock market itself, those things that did the best within the stock market here for this 2 week period probably will struggle the most, like technology, which actually underperformed the overall market today also. So I think it's just important to not overreact. We saw this, at the end of the fourth quarter last year. Just wait for it to play its way through, and then we ended up with a great January, for example. And so, last summer we had a great rally coming out of that, second quarter ending. So hopefully we'll see something like that again coming up here. We did see new home starts. So this is the application to start a new home by a builder. In most cases, jumped 21% for this May versus last May last year. So home builders are feeling very confident. We've seen that in some of the surveys. And home building is a huge driver for the economy here in the U.S. because there's just so many different organizations and people involved. The contractors, the plumbers, electricians, the escrow agents, the mortgage brokers, the realtors, the gardeners, et cetera. So new homes, being created is a really good driver that could help us to offset some of the potential issues that we might have in a recessionary environment because of these higher interest rates. So I thought that was really good news today. So again, I think it's okay for the market to settle in here for a couple of weeks. That's not a bad thing. Don't get too stretched out. Yet at the same time, things are still moving along pretty nicely here. And I think that, we're pushing that recession, possibility out even farther with some of these numbers that are coming through. So anyway, look forward to seeing what's going to happen tomorrow. Thank you very much.